Hello everyone, Larry Lavrenchich here for ichimokucharts.com and forextrading.tv with a daily analysis for gold futures for the day ending Thursday, November 7th, 2013. Well, no change of trend technically today. For the previous day's trading, we had a change of trend to the upside. We had a spinning top indecisive candle and we're looking for a potential lower high and lower low. For today's trading, we've seen the buyers strong enough to take out the previous high, but also the sellers strong enough to take out the previous low, therefore suggesting that there is quite some indecision in this market. We've had the buyers rejected from above the 1320 level and testing almost to the 1329 level and being rejected from there in a fairly bearish manner. But also the buyers being rejected from down around the 1300 round number level, and that was an area that we expected to see very, very strong support coming in, and we should continue to see strong support around that round number 1300. Round numbers are very, very important areas of support and resistance, and this is no different. For today's trading, we've seen neither side really close with control. We've closed roughly around the midpoint level, so it suggests that there has been a slight swing of control from the previous day's trading when the buyers had a very moderate amount of control to neither side, so suggesting that all is not healthy with the uptrend and the possibility of a change of trend to the downside. But what we have seen and what may be important is the size of the black body. We now have a black body, and that suggests that the sellers have made net bearish progress on the day between the open and the close, and it's a moderate size if we look at it compared to recent candles, and suggesting that sellers may be attempting to build some downside momentum to take out the support just below where the market's trading. Now, the support that we had here in the recent past was at 1309, and that was very, very strong support for the past three candles, and prior to that some very strong support, and we've closed just down below there, so that could be significant. But the market has failed to close down below the Kijun-sen, the pink line here, so to see any follow through and see any lower price action, we will require a bearish close down below the Kijun-sen, trading around 1306, and below the 1300 round number level. So a bearish close is what we're looking for, and if we see that, we could quickly see this market testing down to around the 1280 level, or even down to the 1266 level of previous support. We have a zone of support here that extends roughly from around that 1280 level down to around 1290 level down to around the 1286 level. Now, importantly, with the Fibonacci retracement technique, and here we're looking at the relationship of the current first time frame downtrend that the market has been in, and looking at the relationship of that to the previous time the market was trending up, and here we've seen strong rejection from the 38.2% level. Now, in terms of Ichimoku, obviously a bearish market in the long-term time frame with the market trading down below the cloud. The market is also bearish in the short-term time frame by trading down below the Tenkan-sen, the green line here, and the Tenkan-sen is trading around the 1329 level, and therefore strengthening the amount of potential resistance that we may see around that area if the market does rally from here. The important thing here, though, is the Kijun-sen, and the market is still holding up above the Kijun-sen and has been for quite some time for the past four trading days. And we've tested either to or just below there or just very close to there and have been rejected from there, so it really does suggest that that is an important area. And if we do see strong early bearish activity down below there and a bearish close down below there, it will suggest a change of sentiment in that medium-term time frame. So we would have a change of sentiment in all three time frames, but also it would perhaps set the market up for a successful assault on the 1300 round number level of support. Now, that could be taken out for the next day's trading. We don't really know how the market's going to behave. We can't predict that, but what we're looking to is how the market is going to react to these levels. So that's more important. Interestingly, looking across to the Chikou span, that's the orange line here, and that's basically the current close projected back 26 periods, and we're just looking at momentum. That's what it actually highlights, and it highlights that there's quite some confusion in this market because it's trading within the price action. It's trading just below where the market closed, so technically some bearish momentum in the market, but still within that candle, so suggesting quite some confusion and perhaps favouring something of a sell-off. So looking here with the bearish bias in the longer term time frame, with the market trading down below the cloud. Here we have the breakout below the first time frame downtrend. We're seeing congestion now, and the likelihood with the bias being bearish, is that we will see a breakout down below the congestion that we're seeing. So a potential breakout down below the 1300 level, but as I've mentioned, that is such a strong, important level that we are looking for a bearish close to have a lot of confidence in any potential breakout to the downside. That may not happen. We could see the market react to these levels and bounce off these areas of support and trade back up to the 1329 area of resistance. But we do need to be prepared to act if we do see the market close bearishly down below 1300.